Good afternoon. Today is Tuesday and November 22nd. The time right now in Singapore is 12:52 in the afternoon. And overnight on Wall Street, market was pretty quiet on a relative basis because there's no major release of major statistics. The one that we want to watch out will be the FOMC minutes, which is going to be released in the early morning hours on Thursday. For the American will be Wednesday. So of course, in between we have a lot of PMI numbers from Germany, from Eurozone, and from UK. So these will be the main economic numbers to look out for this week. There's no major news in the market except for a fluke yesterday. I'll come to that with later on. So overall, we can see that the Dow Jones basically has marginally take out the Monday's high. Last Friday's high. So we can say market is doing this. Let me go down to the 1 hour time frame to show you the details. And you can see that the market is just trying to do a three wave. So if this is a three wave, that means to say that we can see possibly another pullback. And ideally, I have been waiting for this pullback for so many days already. And I think the market have this potential to come back down, minimum to come down to 32,878, maybe to as low as 32,857. So this bracket of prices very, very small. If the market does pull back, it does give us another chance for the market to have to resume its rally. Now, don't forget that this Friday, there's going to be a lot of option on futures expiration. For those people who have been trading derivatives, you know option expiration sometimes do cause a lot of volatility. And the market has been on a very low volatility environment. And this is just the right environment for the market to do something crazy on the expiration today. So Thursday is going to be Thanksgiving Day, so the market is definitely not open for the S&P 500 or even the US markets. So the key will be Friday. So Friday, do look out for the option expiration on futures for equity index, and I think we can expect a firework. Okay, I am more biased to the upside. I do believe that this rebound from the early October low. Let me go back to the daily time frame. This low here that we saw in October at 28,660, I think is possibly not over yet. I think market after pulling back to this bracket of prices, ideally if it does that, then I want to buy, but I have no working orders in the Dow Jones, but just saying generally speaking, the market is geared for another run up in prices and possibly to test the August highs of 34,281 in the cash index. So this is, I think, something that is quite possible going into the end of the week. So do look out for this potential move in the US equity index. Over in the S&P 500, now this is where I actually have working orders in place. I do believe that this market has not finished its three-wave move. The target is somewhere between 4,118 to 4,232. This is my original target, which means the market must actually challenge the September high of 4,119. Now, when we go down to the 60 minutes time frame, we can see that this basically market has been moving up, and this three-wave, larger degree three-wave does not look complete yet, and there's a possibility for the market, like I mentioned, to actually test the 4,118 to 4,332, and that means the market must take out this last week's high at 4,028.8. So if this market have a pullback, ideally into this bracket of prices, which is very, very narrow, between 3,857 0.6 to 3,863.5. Of course, this is referring to the cash index. So whatever you're trading, whether you're trading futures or whether you're trading CFD, do go back and check with your chart. Okay, so but this is basically the pattern that I think is unfolding. If it is a very neat three wave, if it, in a classic equality move, ABC move, I didn't come into this bracket of prices for me to buy. I've already have working orders working, so I hope to be able to get something done before the Friday option expiration. Okay, so if this market actually come to those prices, I think it does give me the possibility of seeing another run up in prices. Okay, over in the Nasdaq, although this is not my favorite right now for buying, because all the while we can see Nasdaq 100 from the high in November. Actually, today is actually the exact 1 year. Last year, November 22nd, which is today, 1 year ago, the Nasdaq actually picks up. Okay, so on a year-to-year basis, we have seen 12 months of decline. At the lowest point in October, at the beginning of October, this market has gone down by almost 38%. So if you talk about bear market, this is a bear market. So tech stocks has been massacred this year. We can see all the big tech stocks, the Nvidia, AMD, Meta, we can see Apple, all these FANG stock has been drastically drawn down. You can see just look at Tesla. For more than $400, now it's just in the mid-range of $100. So you can see the drawdown in share prices in tech stocks has been rather murderous. So we can see that if I have to buy, this is definitely not my product of choice to buy because this market is so weak. But because the market is so weak, maybe for all we know, the rebound could be equally fierce. So I'm just concentrating on S&P 500. I don't think I am able to buy the Dow Jones because the Dow Jones volume has been relatively small for the retail side. So I think stay with the big one, which is the S&P 500. The volume, the liquidity is massive. And when you look at the futures contract in CME, the two largest micro E-mini equity index, the volume, the largest is S&P 500, and then the next one is the Nasdaq 100 micro E-mini. So the volume is fantastic. So I think if I have to choose to trade, I think I will put all my attention on these two index rather than on Dow Jones. Dow Jones, of course, on CME you can trade the Dow Jones futures, but the volume is nowhere near the volume that we can see in the S&P 500 or even the Nasdaq 100. So the same goes for the Russell 2000. That's why I hardly spend time to talk about the Russell 2000. But there are times you can actually trade that. So for the Nasdaq 100, I'm actually hoping the market can pull back a little bit more, ideally to 11,329 or 11,130 levels. And if the market can come into this small bracket of prices, it does give me that possibility of buying for another run. But I have already placed working orders in the Nasdaq 100 as well. Over in Asia this morning, we can see that the overnight we can see the Hang Seng Index actually came back down to 17,000, almost 390, and then stabilized. And this morning it has been basically been going sideways. No major impetus. Of course, we've been hearing news that in Guangzhou has been locked down again, and this is definitely not a bullish news to excite the market. But then on the other hand, earlier on last week, late last week, we hear that the Chinese government is actually trying to come out with certain policy to support the real estate sector. So that is largely seen as bullish. But the lockdown over the last few news of lockdowns in Guangzhou actually cancel out that bullish news. So the market actually is now not sure where to hit, and basically is just hanging on for dear life. So this is a three-wave pullback. Okay, so for if it's just here and the market did not deteriorate in the next few days, I think if the Dow Jones actually like I mentioned earlier, have a resumption of the rally from the early October low, then maybe it will actually take the Asian equity markets along for the ride. So that means the Hang Seng could have the possibility of maybe going back above the 18,400 levels. Although on a three-wave basis, and this rebound has already done a three-wave equality move, it has basically hit my target. So from here onwards, we have to let the market tell us what it wants to do by the pattern that it is showing us. So right now, I'm neutral for the Hang Seng itself. So over in the Shanghai Composite, this morning we have a run-up in prices. I have no idea what was the news yesterday. The whole China, the People's Bank of China actually held interest rates constant for the fourth month in a row. Okay, so the current interest rate is about 3.65. So no change on the interest rate front. So not sure what is the news that caused the run up just 1 hour ago. So I have to check the news. But basically, I think the bottom price here is 2,885. Doesn't look complete. So maybe if this is a classical three-wave rebound, then my target is about 3,226 to 3,281. So ideally, this is how the market unfolds to complete this rebound from 2,885. Okay. Over in the Nikkei, the market has also hold up. The market is basically trading just above this short-term support line, but basically it is a three-wave. And like the Hang Seng Index, this one has basically hit its target. Actually, reasonable. I think I was looking at 2008 sorry, 28,000 to 28,004, about 500 levels. Okay, so the market went up to a high of 28,000, almost 330. So the market peaks and now is possibly doing that three wave again. So if this is a three wave, even a marginal break of this near-term support may not mean anything. Okay, we may have to see whether it has any significance. But if it's just pull back here into this bracket of prices between 27,500 to 27,600, I think that could also be a buying opportunity, because if the idea is that Wall Street is likely to resume its rally from the October low, then maybe perhaps it will take every equity market along for the ride. Okay, this is my perception. Okay, over in currency market, we can see the dollar continues to rebound, or in dollar yen, you can see yesterday night market went up to 142.25. Okay, actually I have been working on selling, and yesterday I have 2 orders to sell were actually filled, and the last order was almost near the very top of this range here. So in the market going forward, you can see that this market, although yesterday this run up was a little bit out of nowhere, and it was very much in line with the November 11 high, 142.48. Okay, so the market did not quite take out this level, and it has, if you look at it this way, maybe it's a double top. Okay, so if the market in the hours going forward take out this near-term support, I think that is almost given that the market is going to go back down again. And based on this, I think in the near term, I think I'm looking up at least 136. Okay, 136.30 is my limit order. I've already sold. Okay, so my near-term target, yeah, for this run in market do unravels fast, then 136.20, 136.30 is where I want to buy back. Okay, if you look at the daily time frame, the market might actually have a target, a much wider target of 135.17 to 137.80. So this is a very wide range. Let's say we take a mid price, it's about 136 plus. Okay, so I am hoping that the market can come down, and that will mean we have a 5-wave decline. That means after this, the market may go back to 142 again, and then we see if it will come back to do another bigger pullback. So we will have to see how the market unfolds. But immediately, my target for this move is maybe for an extended decline or resumption of the decline. Okay, for near 152 levels. Okay. So now Sterling, I was originally short going to yesterday's market, but this morning I look at it this way, it doesn't seem to want to go down immediately. So it does look like it is basically sidelining. Okay, it is flatlining, and not dying yet. I was actually expecting a big move down, but it doesn't seem to be the case. Maybe the market is developing to something different. So I will have to see what happens in the next few hours leading to the point whereby it has a major breakout either to the high side or to the low side. I'm more favoring to the low side. Okay, so currently I'm flat. I bought back my position with a reasonable amount of profit, not fun, not something to crow about, but at least, you know, I come out alive. And I'm hoping that if at the bare minimum it has a 3-way pullback, maybe to 1.1685 to 1.1610 level. Okay, so this will be maybe the immediate target if there's going to be anything. But by and large, I will rather watch and let the market tell me what it is happening. The same thing is happening for the euro dollar. Euro dollar hit a high at 104.80 on last Tuesday. So exactly 1 week ago, this is where it was, 108.80, and the market has done a 3-way pullback and hit my target of 102.40. So the market now went out overnight to 102.23. This is the low, and the market has rebounded again. Not sure what else is what is going to happen next. Or I will have let the market tell me whether it wants to go up or it wants to come back down. But over the longer term, I think it's probably more down than up. Okay, but for the time being, I'm looking for dollar to continue to retrace. So that means as far as sterling and the euro is concerned, maybe it will stabilize, maybe even go up. So I will have to watch. Over the longer term, I think these 2 pair of currency is likely to fall back down again. Okay, because the fundamentals are all wrong. Okay, Aussie dollars, I've gone short since yesterday, and the market now is retracing back. Okay, so this current level on near 0.66 is definitely not a great entry levels. So I'm just going to hold on to my short position and see whether it can drift all the way down to 0.65. Bare minimum target is 0.6535. Maybe could even go down to 0.6466. So anywhere within this bracket of prices, I will buy back my short position and then just stay aside and watch. Okay. Euro CAC, Euro CAC yesterday has a bump up to 1.34, almost 1.35. Now this spike here was basically based on one particular news that came out from nowhere that say that OPEC Plus may consider increased production. So that caused the crude oil market to actually go down rather sharply, below $80, all the way down to almost $75 before it has a major swing up again. So that decline, that sharp decline out of nowhere, caused the dollar CAC to actually go up, because Canadian dollars is typically tied to crude oil prices, because Canada supply a lot of energy products to America. So it is a major crude oil player as far as Americans are concerned. So that piece of news caused the dollar CAC to actually swing up to 135, almost 135. And I was placing sell orders, okay, and my second entry short order was almost at the tip, okay, 1.3580, 1.3480. So I have the good fortune of placing the order way ahead of time. So when the market suddenly rally up, I managed to sell it again. So I have two open position in holding shorts, and I hope that this market, so far it is three wave, okay. So I'm looking for confirmation here. If the market can take out this near-term support layer, okay, and that will increase the potential for the market to come back down. Where can it go? You will ask me. Okay, so if you look at the daily time frame, I have a large target here at 130.28 and 132 level. So this is a 200 pips range. So again, this market here, if it comes back down, I think bare minimum 132. I'm looking at more closer to 130. Okay, so maybe the lower end 130. So I'm seeing that I'm just hoping that the market will unfold exactly as what I think it will do. That means the dollar will continue to correct, and that is good news for me. Okay, over and what else? Crude oil. Yeah, since I was talking about crude oil, this is what I'm talking about. The market was basically doing nothing. It was basically, I was holding a long position, and I was long on Friday, late Friday, early Saturday morning our time, and I was holding on to this position, hoping that the market would turn around, because there was a reversal signal here. Okay, but it didn't quite turn out. Market came back down on that one piece of news that came out from nowhere, saying that OPEC Plus is going to increase production. Crude oil prices just went down on very thin volume. And then what happened after that? In the hours that followed, the market went out to $75.27, and you can see this big run up in prices. Now, if you look at it from the 4 hours time frame, this become very clear. This is an outside bar. An outside bar, this is what you call Japanese candlestick analysis. You call that the bullish engulfing bar. Very, very bullish. So on the 4 hours, you see this. Now you go back to the daily time frame. This is even more bullish. This is what we call a hammer. So based on this candlestick pattern, this morning I went back in again and just buy. I bought at market price near the very top of the range here, unfortunately, because I'm not sure whether it will pull back or not. So in the meantime, I placed another order to make sure that if the market does pull back, maybe to just under $75, no, under $79, I want to be in again. So I do see this potential for a major run up now that we have technical confirmation of a turnaround. So just based on technical, I'm just betting on the idea that this market is due for a massive run up. And where do I think the market can go up to? Now, when you look at the daily time frame, you will notice that on November the 7th, okay, market took out the October high marginally by 10 cents. The October high was $93.64. November high on the 7th itself, okay, went up to $93.74, took out the October high by 10 cents, and then come back down very sharply. So this bounce here, taken out the high of October, taken out the low in September. So it took out the high, it took out the low. So it's basically what we call that. It is taking just imagine the market taking out a big broom and sweeping all the stocks. Okay, so now it has taken out all the long, taken out all the shorts. The market reverse. I think the market may come back to $93, at least 64 cents. Okay, so I'm holding on to this position, hoping the market will challenge this October-November high one more time. Okay, so this is my immediate target. So from where we are right now at $30.30, not $80.30, the market has at least $14, $15 potential for not $15, maybe $13. $13, is a lot of money for crude oil. Okay, so I'm actually hoping that the market will pull back, give me one more chance to anchor it below $79. Over in gold market, we can see gold actually is also doing something maybe I can show you better in the 1 hour time frame. Now the 1 hour time frame, you can see gold prices has been sliding. Going into Friday, last Friday, I was originally long gold position all the way from October the 6th or October the 7th, and I suffered through the drawdown, and good thing the market did not melt down. It actually recovered, go back all the way to 1,786, and then started to stabilize. It is where because I have two long position going into November. Okay, so the upper half position wasn't the more ideal price, so I basically buy back. Sorry, I actually close up the long position somewhere around the 1,700 plus dollars. I can't remember exact price. So basically, I took out half position, leaving the better price long position open. Okay, then I have another account in which I went short. Okay, so because I can't do both buy and sell in the same account, so I have another account which I normally keep just in case I want to do something to trade, counter trade. So what happened was I sold into the other account in gold position, and the market went down, and on Friday I bought back the position. They have a very nice profit, so and I reinstate back my long position. Okay, so Friday I was long, going into Monday it was looking fine until this move back down on yesterday at 1,731.4. So the market actually went down. I was a little bit depressed, but you know, before the end of the day, the market actually swing around and now come back to near my entry price. Now I'm all good. Okay, so if this market can take out this near-term resistance line, there's this potential the market will go back into this cluster of prices. Okay, this is based on the 1 hour time frame. You can see this cluster of prices is where the market actually was deciding which way to go. Should we go down? Should we go up? But the market decided to come back down. So on the way up, this cluster of prices is definitely going to be a major barrier to entry to higher prices. So I am looking for at least a move back to $1,760. So the market can go back into this area. My latest long position, I'm just going to square off and then hold on to my original long position from all the way back to October 6th. Okay, just not going to keep both positions open. I have two long positions right now. One which I just entered on last Friday, and this one obviously wasn't the best price after yesterday's pullback to 1,731. So we will see if market can go up to 1,760 levels. If that's the case, then maybe I will close that latest long position and just hold on to the overall long position. Now, I do believe personally that the low that we saw at $1,716 thereabout, okay, is possibly the low for the year. Okay, because we have a triple bottom here, and the market ran up very aggressively. So I do believe this run up in prices may not be over. There is that possibility after the market stabilizes, it will continue to charge higher, even to take out this month's high at 1,786, all the way to challenge the August high at 1,008. Okay, so immediately I think my target is about 1,802, 1,803. So if the market goes back up again, if I get another chance to go in and buy again, I will hold on to this price. And when we look at the news report from the World Gold Councils, this year alone, central banks has been buying massive amount of gold. Okay, they have never bought so much gold. The report says that this is the most the central bank has bought since 1967. Something is cooking. Okay, so if the central banks are massively accumulating gold, then of course people like you and me must also be doing the same thing, because I think those are the smart money, right? So if they are massively buying gold, something, whatever the reason why they buy, then basically we must also be doing the same thing. Because if that's the case, there's a very good chance that we're going to possibly see a major short squeeze in precious metal market. Maybe even 2017 may not even hold, may not even cap this run. So I am definitely looking at the breakdown of the global monetary system, especially fiat currencies. Now, this month we see the implosion in the crypto markets. Crypto market has always been saying, this is the new gold, but after the implosion, people goes back to the real gold. So maybe that is the reason that's underpinning the gold prices, because it is no coincidental. FTX blew up 2 weeks ago. It's also about around the same time gold started to rally. Okay, so you put one and one together, may not be related, but I think it is just so coincidental, right? And then of course the report that came in, the central bank has been massively accumulating gold. Now, normally when central banks want to buy gold, they will go to London spot market, because that is the where you want to go to the London bullion market to buy, okay, because this is where the delivery takes place, okay. The one in COMEX, the precious metal, their futures traded in COMEX is basically for them to hedge their long position in the cash market. So this market has been used largely to suppress the price of precious metals. So what happened is that because the demand was so strong in the spot market to the point whereby they simply cannot fulfill the demand. So speculators has been shifting the focus to COMEX futures contract, okay. And we know that typically every year the December contract futures is always the most actively traded contract. And if these people started to demand delivery, there is simply not enough precious metal, whether it's a silver or gold, in the warehouse to fulfill this demand. So I am thinking the market is getting ready for a major short squeeze, okay, and that will cause prices to rally massively. So do watch out for this possible move, and that's the reason why I'm so bullish on precious metals, especially silver. It seems that silver will expire first and then followed by gold in December. So we have to watch the expiration going into the year-end contract. Do watch out for this move. I am thinking that this is actually happening, okay. So this is just my view, of course. Now over in silver, yesterday I was actually having a little bit of grievance. Actually placed an order to buy near the bottom here. My order was to buy at $20.60. Market went deep into below my limit price, but I didn't get a fill. But I don't think I have recourse because this is an OTC market. Basically, I did not trade the futures. If this I placed an order in my futures contract as a futures contract, it will definitely be filled, but it did not get filled in the CFD contract. So I can see the prices really up, and I have no position, because I think the squeeze, the short squeeze that I just mentioned, is going to be even more pronounced in the silver market rather than the gold market. Gold market is basically tagging along for the right, okay. So at this current price, definitely I'm not going to look to chase, okay, because the immediate cluster of prices is this cluster of prices, $21.42 and $21.61. So the market right now is so near to this target area and it's so far away from my stock. So definitely I just have to watch this. Maybe another chance. If the market give me another chance, I will definitely grab it, okay. But until then, I have no position in silver. There's a bit of a boo-boo, okay. So over in crypto market, we still see that the prices are still falling down. Yesterday we have more news coming. The Genesis is talking about halting withdrawal, and that, if it ever happen, Genesis is even bigger than FTX. FTX has caused a massive loss of trust in the whole entire ecosystem in crypto space, okay. But Genesis is even bigger because they are dealing with institutional players, okay. They already have a big hole because the 3AC actually collapsed. It cost them a lot of money, but the parent company actually built them up, which is Grayscale is actually owned by Genesis, okay. So, or is it the other way around? Anyway, but now with this FTX, another hole is, they are looking at another big hole. So if this thing result in Genesis going under, the impact is going to be destructive, okay. So for the time being, what we are hearing is that the fallout from FTX is still reverberating in the space itself, and we're definitely going to hear more and more companies and players saying that I'm getting caught. I know I'm going to file for Chapter 11. So this is the case, okay. So do watch out for this. For the time being, I'm just going to step aside and just going to observe and have nothing to do with crypto for the time being. Fortunately, I have not have any position actively been trading this market for about 2 months now, okay. Because I see this current low price. You ask me to sell, I don't think I have the confidence to sell, and you ask me to buy, there's simply no reason to buy. So I'm just going to watch and just observe how things develop. Maybe next year something else may change, and then we will have new impetus for another something different, okay.